And it's January the 25th, 2023, right here in Lagos, Nigeria. Good morning, good evening. Wherever in the world you're watching from, it's Business Morning live from Channels HQ. I'm Ladi Williams. First off, let's kick off with the markets now. That's after we get our 6 days. It's 6 days to the January 31st deadline set by the Central Bank of Nigeria to stop the old 1,500 and 200 naira notes from being legal tender. And obviously everybody, trying to praying that they extend that date, but obviously the central bank governor did say we might not get that. We're not going to get that, that extension that everyone's hoping for. But remember, you can send us your experiences, with the new naira if you're able to get it, or if you're able to exchange your old notes. You can send us an email at businessmorning@channelstv.com, and we'll share all of that. But now let's see what's happening in oil markets. We see crude oil prices rebounded as demand recovery hopes in top importer China, following its exit from COVID pandemic curbs, provided support after the prices dropped in the previous session on concerns about global economic growth. There we see Brent crude there, those trading at 59 cents. It's up 59 cents, trading $86.72 per barrel. Nice gain there, but obviously still below the highs that we had previously there. We see US WTI, that rose about 46 cents to $80.59 per barrel, having dropped about 1.8% on Tuesday. And now we see that for the CBN, there's no going back, as I said earlier, on the January 31st deadline for the return of old naira notes. And the AFEX Bank is insisting that the 200, 500, and 1,000 naira notes will cease to be legal tender in the country on that date. And the CBN governor, Mr. Gordon Mefele, reiterated the AFEX Bank's stance after the Monetary Policy Committee meeting in Abuja, explaining that the time had been given to Nigerians to make the swap. As part of his decision at the Monetary Policy Committee meeting, the lending rate saw a raise, 17.5%, with other parameters left unchanged. So we got that big 100 basis points hike yesterday. To take a listen.
It is the first Monetary Policy Committee meeting for the year, and the impact of global events in 2022 on the Nigerian economy was considered in reaching some of the decisions at this meeting. The Russian invasion of Ukraine exacerbated the global economy, which is still recovering from the COVID-19 pandemic. An offshoot of this is the impact on Nigeria, which includes rising inflation, especially on food and general household items. The committee analyzed the situation before reaching a decision of the lending rates and other parameters.
MPs voted to 1. Raise MPR to 17.5%, 2. Retain the asymmetric corridor at plus 100 and minus 700 basis points around the corridor, and 3. Retain the CRR at 2.5%, and 4. Retain the liquidity ratio at 30%.
Although the raise in the lending rate is expected following some of the economic indices in the country, the central bank insists that some of its decisions are yielding results, especially the new naira notes.
I must say here that unfortunately I don't have good news for those who feel that we should shift the deadline. My apologies. The reason is because for us 90 days, in fact, we feel it's 100 days is enough for anybody who has money or the old currency to deposit the money in the banks.
The Apex Bank also clarified his support for the federal government through the Ways and Means advances.
We feel as CBN, because we're a lender of last resort, that it will be irresponsible for us to sit idle. It will be a dereliction in our responsibility and duties as lender of last resort to ignore the government and allow the economy and our Nigerians to suffer. Ladies and gentlemen, what we did by lending to government as banker and lender of last resort is normal in any part of the world, particularly when countries face crisis.
The bank expects these efforts to yield speedy results as it continues to seek ways to control all inflationary indices.
Definitely, all central bankers are globally, fighting inflation. The fight continues all the way from 2022, and that we have it there, 100 basis points. And obviously, analysts and experts are divided on that result there. But let's bring in Sam Chidok and our MD, Kairos Capital Limited, join us via Zoom. Great to have you in the show. Good morning.
Good morning, and great to be here. Hi, Ladi.
Yeah. So I guess that blip we saw with inflation on a month-on-month basis wasn't enough, to pause, the rate hikes. I guess we still keep, fighting with more raises.
Yeah, apparently, I would say that it came as a surprise to most market watchers that the monetary policy rate was increased by 100 basis points. Because, I mean, you saw a decrease, a deceleration of inflation in December. Though it was a marginal decrease, but it went down 21.3% for December. Usually, December is a month that you see a hike in inflation based on expansion in families and household expenditure and all the price increases based on just the forces of demand and supply that happens in December. But this last December, we saw a deceleration of inflation, which is a good pointer. So perhaps many of us expected that either the MPR would have been retained where it was, or maybe slightly increased, maybe not more than 50 basis points. But 100 basis points was, I wasn't expecting that.
Yeah, and obviously, we've heard, manufacturers lament about the last increases in 2022. That was about 500 basis points, but we're still going higher at this point. What's going to happen, with the manufacturers and SMEs at this point?
So for the central bank, I think they're narrowly focused on fighting inflation and also trying to rein in the issues around exchange rate. However, you have to also look at the cost of capital formation in the country. And that every time you increase the base rate, which is the MPR, what generally happens is that everybody prices over that. Bank loans, most people who have bank loans, well, many of them should expect letters from their bankers from today to tomorrow, increasing the cost of their borrowing. It's just going to happen. So for a manufacturing concern who is also considering the elasticity of his product and receiving an increase in pricing from his loans, can he carry on and increase the cost of his goods? It depends on the kind of goods he manufactures. That's going to be difficult. So for manufacturing concerns, for SMEs, for even households, for people who have mortgages, for people who have personal loans, those things are going to get more expensive. Then also in the cost of raising capital to do business, even if it's working capital finance, even if it's from the capital market, the cost is going to go up because everybody's got to price over and above this base rate. So it's a two-edged sword. While it fights inflation on one side, it also affects the fragile nature of the growth that we've seen in the country in recent time. And I guess say that we might see a deceleration in growth based on these increases.
And also, we did, hear the governor, talk about that January 31st deadline. He's saying there's no, extension. So I'm wondering what happens to people that are still stuck with the old notes, and how does this impact the economy going forward?
Well, so we've heard from the horse's mouth. And the governor says there's not going to be any change. So if you have the old note, all you need to do is to go to your bank right now and switch it. Whether the banks have enough of the new notes to give to people, that's a different story entirely. Last week, I happened to use an ATM and they still give out the old note. This morning, I just tried it out to see what's happening. And one of the first generation banks, one of the tier one banks, was the new notes that came out of the ATM. So that's good news, right? So we already know that 31st December is the deadline. It's going to be difficult. I dare say that some people in the rural area might be caught up with the old notes, but it's important that as we hear all of this, that people make a determination to go and change to the new note and adapt to it. I would have been one of those to advocate for a shift in the date, just to make sure that you carry along as many people as possible. But I mean, it's a call of the central bank. They're within their rights, they're within the law to change the currency and to put such dates. So I think for the rest of us, we just have to comply.
All right. I guess we'll have to comply, and obviously we're seeing the impact on other channels for transactions. But thank you so much, Mr. Sam Chidoka, MD Kairos Capital Limited. It was great having your perspective today. Thank you.
Thanks for having me.
All right, so and obviously yesterday we did see the market that we had that pullback of about 0.09%, and some say it's because of the rate hike we saw, while others say it had nothing to do with the rate hikes, just profit taking. But apparently global central bankers still battling inflation at this time, even into 2023, and the promise in 2022 was that as long as inflation stays high, the central bankers are still going to keep raising rates until they get to their target point. And obviously this target seems so far, looking at how far we've come with inflation rates globally. But obviously we have Juliana. She's still right there in Tokyo, Japan, there with the Nigeria-Japan Business Forum. She's covering that. She's on ground, and she's been giving us guests from there. And today, she's actually given us Prince Clem Agba, who's actually at the event there, Minister of State for Budget and National Planning. Join us right there from Tokyo. Great to have you. Good morning from Nigeria.
Yeah, good evening from Tokyo.
Fantastic. So tell me, what's government efforts are we seeing, at this time to attract investment, from this forum? Because I know these kind of business forums, obviously we get, partnerships, announcements of investment. So what kind of effort are we seeing from the Nigerian government at this time?
Yeah, first, this forum gives us an opportunity to be able to engage with the private sector here in Japan. That's private businesses. We're also meeting with Nigerians in the diaspora. And the whole reason for this is just to let them know the various opportunities that are available in Nigeria for which they can take advantage of and invest in Nigeria, bringing in foreign direct investment. And for Nigerians who are here, we're also looking for opportunities to invest at home. The forum has provided us an opportunity to unveil to them the National Development Plan and the specific areas where there are opportunities. Knowing fully well that Nigeria, which used to be a mono-dependent economy, now diversified and seeking concentric diversification in the various sectors of the economy, that there are lots of opportunities.
And obviously the event to be ending on Friday, and definitely we'll be tracking all the investment announcements and partnerships coming out from there. But, we know Japan has a robust, service sector. What can we as Nigeria learn, from Japan's progress?
One, Japan is technologically very, very advanced, which is one of the themes for this. And then when we are looking at value addition in all that we are doing in Nigeria, then it becomes really very apt at this time to be meeting with these Japanese companies with the aim of unveiling the various opportunities. As we go along, we'll be meeting with Toyota. We've met with NEC today. We just finished a meeting with the parliamentarians. So it's going to be for them to decide and choose which areas of opportunity they would like to invest in.
And looking at, talking about areas for investment, in Nigeria, what do you think will be top of conversations, talking about investments coming from Japan into Nigeria?
Basically, mainly around value addition. Like agri, for instance, contributes about 25% of our GDP. But agri is still in this very primary stage, and all that we export are primary commodities. So we are looking at investment in this area, especially in the area of storage and value addition, that's processing. So we are talking to companies on these areas.
And looking at, trade relations, between Japan and Nigeria, where you seeing is the next, frontier, for the Nigerian economy? Where do you see them, shifting attention to, talking about, investments, and what can Nigeria actually gain, from most of these investments?
First, these investments will create employment. This investment will also reduce pressure for the dollar, and also these investments will help our exchange rate, because by the time they become to blossom and we'll begin to export products that come out from this investment, we now start to earn forex, and that will reduce the current pressure on the demand for forex. Like I said, we are still at the very primary stages of these discussions. The decisions will have to be taken by the Japanese on which of the specific areas they would like to invest. There has been some discussions around clean energy, especially offshore supply of power with wind energy. That is just one area.
And obviously, we'll be looking out for more of such investments, from this forum. Ends on Friday, and obviously, I know you're still there, and other delegates are also there, and all the conversations about bringing those investments right here to Nigeria. I want to thank you so much, Prince Clem Agba, Minister of State for Budget and National Planning, right there in Tokyo. Thank you so much.
Yeah, thank you for having me.
All right, so there we have it there. We've got updates from Japan, Tokyo. See that the Nigeria-Japan Business Forum, that kicked off on Monday and still going all the way till Friday. We're going to be tracking all of that, and Juliana will be bringing all that information for us as it breaks. Welcome back. Still watching Business Morning live on Channels Television. Now to our next conversation. Major markets are coming off a punishing year that brought eye-watering losses for investors. As we head into 2023, uncertainty hangs in the air, with central bankers ready to raise rates even more to tame inflation. Now, let's find out how you can your personal investment strategies to use for the year 2023. That'll help you create wealth regardless of the uncertainties. We have Dr. Stephen Akintayo, MD, GTEX Holdings, and the founder, Stephen Akintayo Foundation, join us via Zoom. Great to have you on the show. Happy New Year.
Happy New Year. It's good to see you again, Ladi. How are you doing?
Good to see you as always. So yeah, your foundation recently launched a $5 million fund for 5 years to support 1,000 SMEs. Tell us about this and what inspired the creation of this fund.
Okay, thank you for having me once again. We started our foundation 15 years ago. We used to work with orphans, different outreach program for orphans. And then later on, we started this Akintayo bursary scheme. And then during COVID, we saw the impact on SMEs. So we started this Instagram pitch competition where we're giving people 500,000 to $1 million. And in the last 2 years, we've seen the impact of that. In fact, one of the winners of the 500,000 naira was a shoemaker, a female shoemaker. She went on to become first runner-up at a reality TV show called Titan, where they even give 20 million naira. So we've seen the impact of this. We felt, can we institutionalize it and make it something more well structured, and can we work towards giving up to 1,000 SMEs in the next 5 years? So 2023, we'll be giving 24. 2024, we'll be giving 48. 2025, we'll be giving 120 SMEs. Like that, it will get to 2027, which is the highest year of over 500 recipients for that year.
You did mention the structure there. Give us a breakdown, of how these funds will be given out in terms of percentage.
Yeah, so I think I just mentioned that in terms of breakdown of how people will be getting it, but it's a $5,000 grant as for SMEs. And the goal ultimately is to be able to accelerate the numbers of our winners gradually, because we also want to perfect the model. The model currently is that they have to go to www.stephenactierfoundation.org to register. And we have 12 various categories. We just announced yesterday the 2 top winners for the month of January. And the month of January was for agriculture. We have Nutri Boom, Fino Coconut. The lady makes, different types of products from coconut. And then we have TY Foods. She does daily foods and using technology to be able to deliver it to people's home. So those are the 2 winners. So we still have 11 different fields to cover for the year. So every month we're announcing 2 winners till the end of this year. And then next year we'll be having every month 4 winners. And then 2025 we have every month 10 winners. 2026 every month 20 winners. And then 2027 I think we'll be having like 50 winners every month.
And obviously, from 2022, we know liquidity has not been easy. So I'm wondering, how are you able to manage all of this and generate the funds to create the support for SMEs?
Well, for us is that I do a lot of, I'm a serial entrepreneur. So a lot of what comes in since inception from my coaching program, I've written, now I'm adding 3 more books to my 37 books. My birthday, which is this coming Saturday, 28th of January, I earn every day from that coaching, mentorship. A lot comes into that. And I put majority of the funds back into the foundation. We also have friends and families who always support the foundation. And then we have the GTEX Homes, which is a real estate company that has decided to put in a portion of the proceeds from our 1,000 housing units, which is also going to grow to about 25,000 housing units by the year 2035. So a portion of what comes in from that is going to support the Stephen Actierr Foundation so that we're able to push this project. Ultimately, we started as a small company as well with just $10. And, we understand what it means to start a business, to have a small business and struggle. In fact, I posted yesterday when I was announcing the 2 winners for January that I believe that when I meet God, I will tell him that Nigerian entrepreneurs must have an automatic ticket to heaven, but they've already been through hell here on earth. But we are Nigerian entrepreneurs, so
I can imagine. Yeah, it's been quite a grueling year. That's 2024, and obviously 2023 is already starting off quite topsy-turvy. But obviously your birthday coming up Saturday. Happy birthday in advance, and I wish you on that day too. But moving forward now, is this grant just for startups or existing business owners, and how can people actually take advantage of this?
Beautiful. So the grant is for startups, but that have demonstrated that the market needs their services and the market is willing to pay, right, for the value service or product that they're offering in whatever small scale. We don't want companies that are already quite big do not need to apply. We had one of the applicants, she made it to the top 10. But she wasn't eventually picked among the top 2 because our business was already doing, I think, over 20 million a year. And we felt that, yes, everybody needs money. Even we need money. We're trying to build, 25,000 houses. We need money. We're trying to sell. So everybody always needs money. You never have enough. But this grant is for more of those who are just starting. They've demonstrated the business work. We don't want ideas. Ideas in the air. Everybody has ideas. Demonstrate the idea first. Let it be that you've shown that people are willing to pay for the service or product you're offering. Then you are the kind of person to apply. And you just need to visit www.stephenactierfoundation.org and you select which of the category that fits into the type of business you do. And you go ahead and apply. And hopefully, you make it to the top 50. The top 50 will be announced on our foundation and my personal Instagram page. your pitch video will be uploaded. So this is also a way of promoting these businesses. And then we shrink to the top 10. The top 10 will now have a one-on-one pitch with me and a judge who is an expert in the field for that month. And then we'll pick the top 2.
I'm sure a lot of these contestants will be quite nervous, giving off this pitches, like being on Dragon's den at this point. but for many, 2023 is a pivotal year in Nigeria's economic history. People have come into the year with questions, aspirations, hopes, and dreams. As a personal finance coach, how do you think people can grow their personal finance this year? Obviously, the uncertainties are still there, for 2023.
Absolutely. I mean, it's real. I mean, we just heard Microsoft is about to lay off, where Amazon has done 18,000, Google has done, Twitter did earlier last year. And I think Apple is about to do, because, I mean, the CEO of Apple announced 40% pay cut. So when CEOs start talking like that, they are trying to say, oh, I was affected first, before you say I sacked you. But I think the first thing that I advise anyone is that do not panic. Fear is false evidence appearing real. However, do not discard the realities. It's going to be a tough year. You might lose your job this year. And I mean, when you look at also our own CBN just raising interest rates, it means a lot of people in the manufacturing sector will have to start laying off people. So it's definitely going to be a tough year, no doubt about that. But what can you do, right, in terms of your own personal income? And I tell people, I say, you have to also look at yourself as the CEO of You Incorporated. There is the company you work for, or there's the company you own, and then there's you as an individual, and there's issues around your own personal finance. The first thing I would advise you to do is to have some form of insurance for yourself, that if anything happens, there is something that will keep coming in while you try and figure out whether trying to get a new job, whether trying to restructure your business. You want to make sure such exists. Here in Dubai, for example, they announced a fantastic project where every employee gets an insurance for, I think, $1.47. And if you lose your job for 3 months, you're going to be getting your salary steady for the next 3 months. And these are, I mean, insurance company organized things like that way back in Nigeria as well. So don't say, oh, that's why I love Dubai. You can do that in Nigeria or whatever else, personally, where you have structures. Number 2, begin to think of multiple investment opportunities, not necessarily multiple business opportunities, because many of us, our so-called side hustle is already competing with our career, and it's even the reason why we're not doing well in our career. But there are a lot of investment opportunities where you put in money and money go work for you rather than working for money, right? I always tell people you must have 4 sources of income. One must be a job. The second can be self-employed. And that takes me to number 3. How do you monetize your own skill? So I've written 40 books now. I earn every day on Amazon, my website, just from the book. And the day I die, I will even sell more books than while I'm alive. Okay, so it's transgenerational. I am from speaking. I am from coaching people, one-on-one coaching sessions. I am from working with companies to restructure their business and their marketing, particularly their sales team. So how do you look at how many years you've been in business? How do you monetize that skill such that you have some form of self-employment aside your job? And then you have 2 other angles that can now be investment vehicle where money works for you and something keeps coming in. Those will be, so I mean, we can go on and on and on with this topic. But
obviously, multiple streams. That's fantastic. Any day having as much as possible. But obviously, every investor now is looking for where to stash some of those monies that they have laying on the side. And obviously, we've heard about real estate. It's a big money market for investors. But as a stakeholder in this market now, you're spread across Nigeria, Dubai, UK, and the US. What do you foresee for the real estate sector globally, and how can Nigerians partake, in the benefits?
Well, it's a mix of good and bad. Depends on which, which country. For the US, for example, we're seeing slow growth as a lot of people go back to work. What had happened during COVID-19 was a situation where people were in New York, California, were able to move into a place like, let's say, Dallas, right? So what they were using to pay for a 1-bedroom could give them a 3 to 5 bedroom in Dallas. And remember, there was remote work. So they could work from Dallas, earn big salaries, with their company in New York or California. But what has happened is even some of the companies that have laid off, many of them laid off the remote. Facebook had laid off a lot of people working on their, who are remote workers. And that's the first set of people that are having to go. So you are seeing more people, who are, of course, doing real work, in office work, having to come back to major cities and then go back to, smaller apartments and things like that. So, however, there are a lot of more opportunities. So if you're selling 1-bedroom, studio, 2-bedroom, in those sectors, you're going to do very well in those countries, rather. Dubai has been doing so well since last year. It's still doing well. There's been a lot of Russian money coming in, Ukraine, a couple from Lebanon and some other European countries have been coming to Dubai and investing heavily. So Dubai is just, milk and honey since last year and up to now. So rent is up. If you are a real estate investor, you're just making it big time here in Dubai. In Nigeria, what I keep saying is that you can hardly ever find a crash in the real estate sector. There may be some slow growth, but you can't have a crash. And the reason is because the housing deficit is so high that no matter what, you still need more houses. You can't go wrong with real estate, particularly in Nigeria with high inflation. One of the edge against inflation is real estate. You can't go wrong with it. You want to look at land banking, you want to look at rental income. These are sectors that will always yield. But of course, get professionals to counsel you. Location is very key. But this is the year. No matter what, we're entrepreneurs.
Right.
We always figure a way out.
Right. I guess with all the uncertainties, there's still opportunities lying out there. I want to thank you so much, Dr. Stephen Akintayo, MD, GTEX Holding. It was great having you on the program today.
Thank you, Father.
Now, let's talk commodities now, the AFEX segment now. For the weekend at 23rd January 2023, it's mostly red on the activity summary for the AFEX trading for the weekend. Join us now is Omotola Akangbe, market data and research analyst at AFEX. Great to have you on the show.
Hi, good morning. It's a pleasure to be here this morning.
All right, Omotola, give us a breakdown of performance on the exchange.
So like you said, key indicators actually saw major declines across most of our key indicators. For our turnover, there was a decline of about 14%, declining from about 3.7 billion naira to close the week at 3.2 billion naira. There was also a decline of 47% in total volumes of contract traded, declining from 12 million contracts to close the week at 6.2 million contracts. There was also a decline of about 13% in number of deals traded, declining from 239 deals to close at 208 deals. The AFEX commodity index, however, saw an increase of 3.3% to close the week at 492.28 points. The AFEX export index, however, saw a marginal decline of 0.2% to close the week at 245.43 points. Across volume traded, we saw an increase in the volume of paddy rice, sorghum, cocoa, and sesame. For our price update, there was an increase of 11.94% in the price of maize to close the week at 239.76 naira. There was also an increase of 3.20% in the price of soybean to close the week at 335.49 naira. We also saw an increase of 6.9% in the price of paddy rice to close the week at 328.83 naira. Cashew saw an increase of 8.93% to close the week at 494.38 naira. Cocoa also saw an increase of 1.74% to close the week at 1,896.7 naira. Sorghum, however, saw a decline of 7.94% to close the week at 261.46 naira. The prices of other commodities remain flat. To get more information about our commodities, kindly visit our website at africaexchange.com. And to trade commodities, you can download COMEX on Play Store or the Apple Store.
Motola Kongbe, market data and research analyst at AFEX. Thank you so much.
Yes, it's a pleasure.
All right, let's take the conversation further now. We see AFEX is now carrying out an African expansion that will utilize learnings from Nigeria to impact food systems across other African countries. Following an expansion to Kenya in 2022, AFEX is now entering Uganda in the next phase of its African expansion. For now, let's talk to Abdul Hafiz Dusoya, MD, AFEX Fair Trade Uganda. Great to have you on the show.
Yeah, thank you. Good afternoon from Uganda.
And good morning from Nigeria. So AFEX began its move into East Africa with Kenya. That was in 2022. You're now expanding into Uganda. What informed this decision, and why now for Uganda?
Okay, thanks for that question. So AFEX started operations in 2014 to solve the problems facing the agribusiness sector in Nigeria, then expanded to Kenya in 2021. The AFEX vision has always been a Pan-African one, with the objective of driving seamless trade of commodities between countries through our network. However, our goal is to be a reference point of commodities in Africa by building an inclusive, sustainable, and efficient market system and championing efficient trade and food systems across the commodities market in Africa. The plan is to replicate our success in Nigeria and Kenya in other African countries in the coming years. Why Uganda now? Uganda, as we know, is a food basket of Africa. Uganda's agricultural potential is one of the best in Africa, with low temperature variability, fertile soils, and it has 2 rainy seasons in Nigeria, so leading to multiple crop harvests per year. According to United Nations Food and Agriculture Organization, Uganda's fertile agricultural land has the potential to feed more than 200 million people. No wonder the neighboring countries like Kenya, DRC, Sudan, Tanzania, and Rwanda get their produce from Uganda. In last financial year, agriculture accounted for 24.1% of GDP of Uganda and 33% of export earnings for Uganda. Due to these reasons and many more, we see it as logical that the next country to move to is Uganda.
All right, but how will the addition of Uganda, how will that impact AFEX's operations and business focus going forward? So your attention is not, overly divided.
Okay, so the focus will remain to ensure seamless trade across commodities markets in Africa, with operations of each country we expand to functioning independently of each other. However, contributing to the overall vision of helping Africa feed itself by boosting food security and making food production more efficient in Uganda. And we're doing this by closely aligning our goals with the United Nations SDGs: zero poverty, zero hunger, gender equality, decent work and economic growth, then sustainable consumption and production. There are challenges in Uganda, which it's the same across a lot of African countries. Challenges like poor infrastructure, limited market access, fragmented market structure, limited access to financial services and funding, insufficient supply chains, and low institutional coordination. But we at AFEX, we know how to address these challenges by supporting and closely working with players and stakeholders in the Uganda food systems. by coming up with innovative ideas to unlock the opportunity the Uganda grain value chain has to offer. So we're going to do all this through input financing and farmer training during pre-production, production, and after production. And also we will ensure efficient planting and input application processes, good agronomic practices during production too. We will also provide storage access, partner with logistic companies here in Uganda, then standardized grading here during aggregation and processing. We will also provide access to markets to farmers by linking them to the major millers, processors, etc. And finally, we will also do this by providing market data and information to enable players in the entire value chain optimize value.
All right. So obviously, you must have learned something from your operations in Nigeria and Kenya. How will you apply these lessons to what you're doing in Uganda?
Yeah, you're right. We have had a lot of learnings in our operations in Nigeria since we started in 2014. And definitely, we are going to apply these learnings and tailor these to our Ugandan operations. Some of the learnings, I'll just mention a couple. One, we'll be establishing an efficient outreach model in commodities areas of Uganda. So this will bring us closer to the farming communities in the hinterland. Two, having the right technology and the right set of people in place. We have our robust technology infrastructure that will give us leverage to facilitate the implementation of our operations. Then three, providing accurate data for market intelligence and analytics to drive decision making. We'll also be adopting sustainability and traceability in the value chains we intend to exploit, and having the right partnership, both local and international. Then finally, having good corporate governance. We will implement these learnings and continue to improve on them till we achieve our goals.
Fantastic. And talking about those goals, what milestones are you looking to hit in the coming months?
Okay, so first of all, let me mention the milestone we've achieved since we got incorporated the 1st of December 2022. So far, we've established warehouses in the northern part of Uganda, which is the Lira district, and also established a warehouse in the eastern part of Uganda, Bolambuli district. We have a total of 10,000 metric tons of capacity. Also, we've been able to profile farmers and work with smallholder farmers, almost 2,000 smallholder farmers so far. We started aggregation a couple of like almost a week ago, and so far we've been able to aggregate close to 500 metric tons of maize. Before end of the year, we plan to aggregate 15,000 metric tons of maize, and also establish 25,000 metric tons of warehouse capacity, which is going to solve the access to storage that majority of farmers are facing here. And we also intend to work to be able to work with 10,000 smallholder farmers in building their capacity and also their productivity in getting to where we want them to get to.
Okay.
And also we're able to give them input financing, 50% of that 10,000 smallholder farmers. And in addition to that, we intend to explore other value chains towards the end of the year, like sorghum, barley, soya beans, and coffee towards the end of the year.
All right.
And finally, we'll continue to establish cordial relationship with the host communities.
All right.
We believe that with teamwork, great execution, excellence, and empathy, we will be able to achieve our goal of being a reference point of commodities in Africa and building an Africa that can feed itself. Thank you.
Right, and obviously you have your hands full for 2023. I wish you luck in meeting all those milestones. Thank you so much, Abdulafiz Odusoya, MD, AFEX Fair Trade. Thank you.
Thank you. Welcome.
All right, take a moment now. And from the AFEX commodity market, now we move to another market that closed marginally down yesterday, 0.09%. We have Anite added with the details now. So Anite, quite interesting.
Yeah, good morning,
had a pullback on the day that the MPC raised rates by 100 basis points. How's it looking?
Yes, Ladi. I think, if you ask me, I think what happened at the equities market is more coincidental, according to one of the traders that I spoke with earlier today. So, you know, the MPC announcement was made about 12:23 p.m. yesterday, which is about almost 2 hours before the close of trading. But as at intraday yesterday, the market was in the green. But then it managed to...
we had that flip at the end.
Yes, but it's as a result of profit taking. But with that being said, we will be looking out for how the markets, how the investors will be reacting, you know, to that market. But for the fixed income market, it's more of a bullish sentiment, and that's what we'll be taking a look at before we drive closer into the equities market. Now, so the equities for the fixed income market, bullish sentiments for the bond. That's according to the trading results released on the FMDQ exchange yesterday. Bullish sentiments. That's what it closed with for the bonds market. Total number of deals carried out there was 26, worth about 9.12 billion naira, and that's because the average yield there, it contracted by 6 basis points to 13.32%. And at the same time, we saw investors' interest in the March 2024 bond paper. Now let's take a look at the Treasury bills market. Treasury bills market, it was also bullish. Bullish sentiment, average yield there contracted by 7 basis points to 3.4%. And then for the OMO segment, the average yield there was flat at 2.9%. Now let's talk to Chioma Udu, fixed income dealer at GT Bank, to give us more details about today's what's happening today. I know that we have a primary market auction today, and then of course Chioma will be giving us more details. Thank you for joining us, Chioma.
Thank you for having me. Good morning.
Okay, so now yesterday, before I let you go, just one question. We had the first interest rate hike for 2023, which is the 5th time starting from March of last year to now, all the way from 11.5% to 17.5%. Now, aside from other impacts, how is the market reacting to this?
Well, the market, because of the liquidity we have in the market, like you rightly said, we have over 880 billion beginning in the market, and then we had more back posting coming to the market. So opening today, the market is about 1 trillion up. As a result of that, we saw a bullish bias across the short end of the yield curve. We also saw some buying at on the 24th, like you rightly mentioned, moderating the risk tonight about 9.5. The hike in interest rate, 100 basis points, hasn't really affected the market because of the liquidity we have. And we have an auction today, a T-bills auction, 222.5 billion on upper cross street tenors, where we have 217 billion of the 1 year. We expect that there's going to be a lot of interest in that space because of the liquidity we have, and we expect rates to moderate across the 3 maturities and upper.
Okay, so Chioma, one more question before I let you go, just about 60 seconds. Now, the DMO has announced the issuance of 4 bonds. That's within the bond issuance calendar for the first quarter. 4 bonds of 90 billion naira each, worth about 360 billion naira, and that, of course, that includes the federal government's plan to borrow 1.2 trillion naira from the debt market. So now, how is that pricing into the market?
Well, after today's auction, where we expect some liquidity to leave the market, we expect some debit and funding in the market. We're going to see the auction coming on Monday. And we expect that that's going to help take out some liquidity in the market. We expect that the DMO is going to pack about 400 billion across the 4 tenors because of the liquidity in the market. But what we expect from investors and traders is that they'll try and test their waters. Inflation is currently at 21.37, and with the 100 basis hike in MPR, we expect that the traders and investors will try and see how they can get more pay or more interest payment from the central bank and from the DMO. So we expect that rates are going to trend up across the 4 bonds offered on Monday by the DMO.
Okay, thank you so much, Choma, for that analysis. And of course, our eyes are always on the markets to see how they go, whether north or south. So that was Choma Udo, fixed income dealer at GT Bank.
Right.
So, yeah,
fixed income markets still, they're having fun, with all of this hikes at this point.
But for the equities market, before I go, it was just 25 billion naira loss, and that's due to the gainers of Monday. They were also the losers for Tuesday. So let's see what side the market swings to.
Fantastic. We're looking out for that. That was Anita there giving us the details for the equities market and fixed income market right here in Nigeria. Let's look at other markets now globally. We see Bitcoin there, the crypto market still holding that $1 trillion mark, and we see a struggle right now with a pullback in the market, but we still have neutral, talking about the sentiment in the market today. Let's look at the market cap. We see that's trading about 1.02 trillion naira, still $1 trillion, still above that $1 trillion mark at this point. 3.34%, that's a pullback we're getting this morning. We see volume traded, that's up 0.39%, and we see Bitcoin dominance, that's inching up, gradually. We're seeing and obviously showing that, Bitcoin is dominating most of the altcoins at this point with this rally that we saw earlier. So obviously investors have their eyes on Bitcoin dominance, because if this continues to grow, then the altcoins are going to bleed out most of those gains. So let's look at the price of Bitcoin now, $22,681. We did get that break above 23,000. Major resistance there, did break that, was down 1.95%. Some say it's profit taking at this point. Others say it's just a bear market rally. So this rally that we saw, in January might not continue. But obviously, some investors are still very optimistic, hoping to make gains in this market. Volume traded $27.30 billion. Let's look at the price of Ethereum. We see that's trading at about $1,600 for Ethereum this morning, $1,550. That's down 5.33%. So we've seen a big pullback with this profit taking we're seeing in the market this time. Volume traded, lower volume though, $9.24 billion. Maybe it's taken a breather before the next move. That's what we're seeing for Ethereum and Bitcoin at this time. But obviously, investors have their eyes, on these markets. We have the U.S. Fed making their rates decision. Be at the end of the month into February. We'll see how that impacts this market and global equities market going forward. All right, that's it for the markets, and that's a wrap on the program today. Don't forget to join us by 1:30 on Business Incorporated for more updates and developments in the world of business. And you can watch this again on our YouTube channel. Just flip over to YouTube, search for Channels Television, flip to our videos, and you can watch all our productions. Thank you for watching today. I'm Ladi Williams. Enjoy your day. Bye.